All right, guys, welcome back, and this is going to be like the first installment of this little mini series. And yeah, today, guys, I'm literally just going to be talking about when to use the lower time frames for your entries and what you want to be using them for. Because whenever you go down to the lower time frames, I think you can get really, really confused about what you're looking for and why you're looking for it. And guys, like, you don't want to be wasting time. You really don't want to be wasting time with getting too confused and too into the lower time frames, because you should only be using it for entries. Like, I never ever monitor my trades from these time frames, guys. Okay, I literally use a 5 minute and a 15 minute purely for entry, and that's more or less it. Like, I don't really fuck with them too heavy in terms of monitoring stuff, because the market structure breaks on these time frames so fucking much that you don't want to be focusing all your energy on looking at using them for like structure. Right? You want to use them for structure to get an entry, guys, but you don't want to be monitoring your trades off them, because it will really, really screw your mentality, and you'll kind of lose track of what's really going on in the market and what's going on the higher time frames as well. So I'm going to just show you like the 3 steps and the 3 ways I use use the low time frames, guys, in relation to my entries. And yeah, more or less in my opinion, the best way to use them is. So guys, like, we're going to literally just start off with using the 50 minute and the 5 minute for entries off of high time frame blocks, right? So for me, this is like what I most commonly use them for. And this is more or less to get more risk to reward on my trades, guys. So as you guys know, like, a lot of the the 2 strategies I teach is literally like a return to block, an OTE entry like that. Or we look for like a breaker setup, which I don't have here at the moment, but I will show you guys in a bit. So, guys, like, trading is very simple. Like, you can buy now, the strategy that I use, which is usually like an OTE entry. And you literally buy from the block, put your stop below the block, and you target the high, right? So really, really simple stuff, guys. But the way that you can the way that I make I get more bang for my buck with this kind of setup is that I don't just enter off this 4 hour block, guys, okay? What I will do is that I will scale down to a lower time frame, and this is just to give me a better entry, guys. So let's say that I was just going to use this block, right? So let's say I wasn't going to do anything special. I was just going to use this block and use it to get a trade from, and I wasn't going to scale down and do anything like that. So let's just say I entered off that trade, right? This is a bit of a tight one, but let's say you entered off the tip of that block and you put your stop. So it was about 45 pip stop, right? Which is fairly wide, especially if you guys know, the kind of stop losses that I use. So let's say you were just going to do that, right? And you were just aiming for that previous structure high. That would be around almost 100 pips, right? And that'll be a 2R. So you're getting, it's 2 risk to reward. You're getting 2 times whatever you're risking, right? So that's all right. Like, you can do well off taking 2R trades, right? I'm not saying you can't. However, a lot of you guys know, and a lot of the reasons why you guys have actually come to me is purely because of the risk to reward that I get on certain trades, and more or less how I get them. And this is the only difference this is what makes me a bit different from other people, guys. Like, I won't just take the setup from a 4 hour chart. And you can do this, and honestly, I would say this all just comes down to just your psychology and your risk tolerance and your time. Because honestly, guys, like, if you don't have time to be on, intraday trading and scaling down and waiting for like certain setups, guys, then literally just buy high time frame blocks and just use more risk. Like, that's literally my ethos, really. Like, if you're going to trade off the high time frames and you don't have much time, but you still want to kind of make more from your buck, then see what your consistency is, and then just up your risk, guys. Like, it's that simple. I mean, as long as you can handle like 3, 4, 5% risk, I wouldn't say anything more than 5% on a trade, guys. And that is, I would really say, look at your consistency before you start risking that much, because that is quite a lot. But let's say that you had a good consistency and you didn't have time to scale down, right? I would say just use more risk on this kind of trade, because let's say you got this trade worked out for you, which you did, and you got 2 times whatever you risk. If you risk like 4%, you would have made like 8% of your account. So guys, like, I'm just showing you a technique to risk 1% and to get the same amount. So what I tend to do is that to do these things, I go down and I scale down on my low time frame. So I mark out my high time frame block as it is, guys, first. And then what I'll do is I'll just gradually scale down. And I want you guys to realize this is a gradual thing. Don't think you're going to just scale down right to a 5 minute after you've done this. Like, I do that now, but it's something that comes with practice, and I don't want you guys to rush it. So what you should do is that you should have your levels marked out, right? And I actually do this for confirmation too. So a lot of the time I don't just take trades from these levels because I want to see price showing a willingness to go higher. Because at this moment, guys, you can see this was quite bearish because it did pull back into that block, and that was quite a big factor for me. So I thought, okay, I'm not going to just take full risk on this. If we got more of a reaction like this and it went straight down to that 4 block with that kind of price action, then I probably would have just entered straight off that. But because I didn't get that, guys, what I would do is I would mark it out and then I'll scale down to see and get some sort of confirmation on the lower time frames that this wants to go higher. Now, this is the way that I implement the 5-minute and 15-minute charts, guys. So what I'll do is I'll mark out, scale down to my time frame, right? So obviously here we have the same 4-hour block, but what we do have here also is we have a breaker 2, right? Which is that candle there. And we also have a hourly block that price actually pulled into. All right, so we've got an hourly block and we've got a breaker, right? So this is why it's important to scale down, guys, because this is the kind of information that you don't get from just looking at a 4-hour time frame, right? So in this situation, guys, like once I know what I'm looking for, once I have my block marked out, all I'm doing is I'm scaling down the time frames to see where price is reaching for. So what I'll do is I'll scale down to the hourly, then I'll see, okay, what is the block that price actually pulled back into? And guys, you could really use more than anything. You could have used that block, that breaker there, or you could have used this block, right? But for argument's sake, I'm going to just use that block and I'm going to get rid of that line now. Right, so once I've done that, I've scaled down again to the 15-minute. Now, you can scale down to the 30, but just for time's sake, I just tend to scale down to the 15-minute once I have an hourly block I'm looking inside of. And this is just personal preference, guys, but for me, I like the hourly better usually. Like the 30-minute does have really, really nice clean price action, but the hourly is just, you can use it almost like a daily time frame for your 5 and your 15-minute charts. Like it's really, really good. So I just tend to use hourly, guys, and what I do is I scale down again, and what I'll do is I'll get rid of this block that I marked out and I'll refine it down again. So where is the block that price used at this point to go long? It's right here, yeah? So again, what I'm doing is I'm marking out, I'm just scaling down, guys. I'm scaling down and down. So here on the 50-minute, this is the block that price used to go long, right? That 50-minute candle right there. Okay, so once I know that, guys, all I'm doing is I'm waiting for some sort of market structure break on this 50-minute time frame to show me that price is, has a willingness to go higher, right? And I'm not gonna, lie, guys. In this situation, I'd have been looking for it to happen probably around there. So I would have wanted that high to be taken out, and then I would have seen a pullback into a block, right? However, we didn't get that high taken out, but what we did get is we did get a return to block right here. Okay, so price went up, literally had a drop back down, and then it found support. So it was using, from here, from this information, we're showing that price is bullish, right? Because we're getting bullish price action, which is a return to a block, or bullish order flow inside of a higher time frame block. So as much as this market structure didn't get broken, guys, and usually I would want that to get broken, what we are seeing is we're seeing price respect bullish blocks, and that is the key thing, guys. You want to see price respect these bullish blocks when you are scaling down to your time frames, because this is what is going to give you the confirmation alongside that high time frame bias to go long, right? So once I start seeing this confirmation, guys, and here you can see price is gradually moving up. For me, when price fully broke and closed above here and then it retraced, this would have been a perfect entry right here, okay? So this is how I scale down, guys, and this is on a 15-minute chart, right? I'm not even going out to a 5 just yet, but if we pull the Fibonacci from that low to that high, you can see the price did come into the OTE area right there, and we did get a block OTE setup right there, okay? So, what's the point of doing this? And that's what I'm hearing you guys ask, like, why the fuck would I scale down when I already could just enter a 4-hour time frame? Now, the reason why you do this, guys, is purely because once you know that price is bullish, once you can see some bullish price action, you can just enter off of that level there, guys, with confidence. And let's say you entered off here, look at the amount of R you would get just to the same target, right? That's almost 11R from the same trade that you would have taken on a 4-hour that would have given you 2R, right? And this is just from scaling down to your time frame. So, guys, like, I would say using this strategy works extremely well when you are basing off 4-hour blocks. Like when you're refining your blocks and when you're refining your entries from the higher time frames, this is when this strategy works the best, because And the key to it, guys, is you want to enter as close to the high time frame block you are using. So let's say this was the tip of, or this area was the tip of the 4 hour block, which it is. You know, although we have refined it down to the 50-minute time frame, guys, this is still the same 4 hour block that we're using. So, guys, like, you know, once you're like, you want to get in as close to this area as possible, but you want to wait for a market structure break and you want to wait for a return to block. Okay, so in this situation, that would have been where I would enter. I mean, you could have entered from there, but I really want to see price break above and give me some sort of confirmation. So I don't really mind waiting. I mean, you could even wait to here, and I'll talk about that in a second, guys. But essentially, the key to this is just to find your 4 hour, your daily, or your high time frame block, and you want to just wait for price to come into it, and then you want to scale down to the hourly, to the 15-minute, and look for a break in structure, and then you want to look for a return to block, right? And guys, like, if you see, this is the power of understanding price, because once you know where it's going, and once you know that it's pulled into your pivot level or your block, then you can just, and you can take these entries with confidence. Because guys, like, put it this way, if price is pulled into a 4 hour block, right, and it's giving you bullish confirmation, it should not break these blocks. There is no reason for it to break through these blocks, right? And that's why I'd always say, guys, if you can use a 50-minute time frame for this, use a 50 minutes instead of a 5 minute. Like, you can use a 5 minute if you really, really want to get to the nitty gritty, but you know, just for confirmation and just for ease of use, I would say start with the 15-minute, because it's going to give you less ag and less bad price structure, right? So guys, like, essentially what you're looking for is you're just looking for bullish price action inside of, or as close to, the higher time frame block you're using. So this is one way you could have gone entry. You could have gone entry there, guys. You could have even used this breaker, and I think this is probably what I would have used as well. I would have waited for price to get above that as it did and return to that, and that's where I would have used to get an entry from. And guys, like, you know, there's so many ways you could have got entry here. Like, you could have got an entry there, put your stop below that block right there. I mean, if you did that, let's see how much R you would have made from that. So assuming you entered from the block's high, right, top of the wick, and you put your stop below, a few pips below the structure low. And I'd always say, guys, when you're doing this, like, you want to put your stop just a few pips below the low, because price can actually run that low and then rally back up. I've seen it happen. So just to be safe, put your stop loss like around 2 to 3 pips just below a structure low or a structure high, depending on which way you're trading, right? So in this situation, guys, I mean, look, like, same thing. Let's say you were just targeting that high. If you entered from there, you could have got a 9R from that trade, right? Let's say you decided to enter from this breaker here. Let's say you wanted to enter at the top and you put your stop a few pips below, right? That's still what? A 9R again. Okay, guys? Well, let's say what you did instead is that you waited for an OTE entry from this structure low. Well, I mean, you could have used that low, really. I would probably use that low where the block is, but let's say you use that low, boom. Price pulls back right down deep into the OTE level as well. And it's also inside a breaker, and it's come inside a block. Well, it didn't quite reach that block, right? But you understand where I'm coming from. So there's so many ways you could have got an entry from here, guys. I mean, I would always say wait for the confirmation, wait for the break, because, you know, it's just better to be safe. But, like, guys, you could have easily secured 9R from this trade. And this is the beauty of understanding what you're looking at and how to actually understand and incorporate the information for you to formulate a trade idea from. Because once you understand these, you know, all we're really doing, guys, like, it's nothing different. Like, we're using the same entry technique, right? We're using an OTE entry and return to block, and we're using a breaker setup, guys. It's the same shit. Like, I'm not changing my strategy on, you know, depending on the time frame. All I'm doing is I'm using these entry techniques on, you know, with the high time frame in mind. That's all I'm doing. I'm looking for these entry techniques at the right time when I should be looking for them, not at the wrong time, right? And there's always a right and wrong time to do certain things. So, guys, like, this is a really simple thing, okay? You could have just waited here and got an entry there. Now, this was a similar situation to last week's price action, right, on the 28th of August. So I'm going to show you guys why I waited for confirmation here. So this is the second way you could have used it, guys. I mean, this is just a bearish setup to show you what I mean. So let's say you were unsure, right? So price took out that low. It kind of tells you that low. It didn't close below. Let's say you weren't sure that this was going to go long. What you could have done is you could have waited for price to pull back inside of this block here. And I know it's a really, really wicky one, guys, but that is the last candle for the down move. So that is the price, well, that's the block that I would have probably used. And understand, using the same technique, guys, all we're doing is we're marking out that block. So let's say you wanted to go short this market, which a lot of you were calling last week, but you didn't know when to go short, or you wanted to just wait for an entry, or you wanted to get tight stops. The way you would do this is you wait for price to pull back into your 4-hour high time frame block, guys. And your high time frame block is literally any time, like any block on the 4-hour time frame or above, right? The hourly doesn't count, but the 4-hour is the lowest high time frame that I would say you can use for this kind of technique. So you want to just wait for price to pull back inside of a 4-hour block or above, or a daily or a weekly or a monthly block, whatever, depending on your style of trading and what you're doing. Wait for it to pull back inside of your high time frame block. Then you want to scale down to the time frame. So you want to scale down to that time frame and find the hourly block, right, that price is reacting off of, okay? You want to make sure you do that. Now, in this situation, guys, the block I would have used is this one right here. I mean, you could have used that one, and to be fair, that would have probably been a better block to use anyway. But just for entries, just for getting in, I would have used this block, right? So let's take a look at how you could have got entry from here. So all you're doing, guys, is you can see, look, price broke that structure right here. Price actually did close below it. So, this is another good reason to actually scale down, because you can see exactly what price is doing on the lower time frame. So you can see, okay, price actually did close below that low on the hourly time frame. But on the 4-hour time frame, you wouldn't have seen that. So, basically this can change your whole game, guys, because if you looked on the 4-hour time frame, it didn't look like a market structure break. But right here, you can see that price actually did close and close below that structure low. So in fact, it did actually constitute a break in structure. So in other words, guys, it just gives you more confirmation. So once price pulls back into this area, it's the same strategy, guys. OTE again, there's nothing different. OTE return to block. Let's say that was enough for you, and let's say you wanted to wait, then boom, just scale down to a 50-minute time frame again. And what you want to do here is you want to wait for bearish price action. Right? So in this situation, guys, I'm not going to lie to you, I would have waited for a clear break of structure first. So I would have waited for price to break a low like this one right here. And then I would want to see a return to that original block that I used. So in this situation, this is why it's good to wait as well, guys, because look, if you wait for price to come back there and find some resistance there and then go short, then you would have, you would have got a good entry, because look, number one, in this situation, if you wait for price to come back there to go short and you didn't just enter off it straight away, then you could have seen price expand and then just blew through your target. So if you see in these kind of situations, it stops you from taking a loss, because you're waiting for the right conditions to get a proper entry, right? So in this situation, guys, what happened here is that price more or less just decided to blow through a target and run that high again. So this high basically got rated again. And of course, this is just for liquidity again, guys. This happens a lot on the lower time frames, and this is why I say don't monitor your trades on the lower time frame. Make sure you just monitor them on the higher time frame and just use this time frame for an entry, because this shit happens all the time. All right, so let's say you waited for that to happen, you wait for that move, and you're waiting for another break in structure. Boom. This is your break now. So now that you know price is using the area as resistance or supply, all you've got to do is wait for a retracement. So price broke that resistance, that support level, or it broke to that low, right? Broke structure again, and then all you've got to do is wait for it to pull back, guys, inside of your area for short. Boom. So all you've got to do is, you know where to enter from, guys. You enter from the block, the bearish block, inside of the OT area, right? That's all you're doing. So boom. There you go. Price pulled back inside of this block right here. And then all you got to do is go short from the block, put your stop above that. And now, guys, what have you got? So if you went short from the body of the block, and you put your stop above there, you would have made, what, 3R from that trade, right? Okay, so that's the minimum you could have made from that trade, guys. So let's say you didn't do that. Let's say you wait for another break and structure to get a tight entry, because that was quite a big stop. That was about 16 pips or 17 pips, right? Let's say you wait for another entry. Here you go again. You have another OT entry right there, guys. Okay, so prices didn't break that structure in the market, but what it did give you is it gave you a pullback. Okay, and really and truly, guys, this is something to remember. Once you know where price is going, and once price is pulled back inside of your high time frame block, usually the blocks will hold. Like if you see price pull back and it gives you an OT entry, like there is a much stronger chance of this 15-minute block holding than it not holding, especially since you've already framed it on the higher time frame. And it's really that simple, guys. You're just waiting for price to pull back inside of your block, and then you want to wait and get in sync with that order flow on the lower time frame. And as you can see here, guys, boom, pull back here, touch that block, did wick up into it, but it didn't even close. It didn't even close inside that block, and then boom, expansion down. Same thing here, guys. Price literally gave you like a little small OT retracement. It just wicked in that block, then kind of like paused there for a sec, couldn't close above it, then boom, expansion down 50 pips right there. So let's say you got an entry from this block here instead, guys, okay? And you just put your few pips above there. Again, you'd only made like 3-4 R from that trade, but you can see, guys, like where I'm going with this, right? It's really, really simple. All you got to do with this, and like this is how you can really maximize the risk reward you're making on your trades. But the way to kind of use this, guys, is just to wait for price to pull back inside of your high time frame, and then just wait for a breaker's market structure on the low time frames, and use your entry technique. It's really, really, really that simple, guys. And I want you to remember, like, this is only for when you're using OTE setups, or only when you're waiting for price to pull back into a block, right? So when you're waiting for price to pull back into a block, like it did right here, okay, like it did up here, even here as well, because we actually had a pullback here again, that's when you want to use your breaking market structure, right? However, you can also do this for breakers too, and I'm going to just show you what I mean. So here, guys, we had a run of a low, right? So you can do the same thing for highs and lows. So when you want to trade highs and lows, when you want to trade retracements like this, so let's say you wanted to trade that move back up, what you would be looking for is, first of all, you want to mark out the low that just got run. So in this instance, guys, that low got run right here. And when you're trading reversals, guys, you want to be looking for breaker setups, period, okay? You're always looking for kind of breaker setups when you're looking for reversals. So in this situation, I'd have marked out my high time frame level, which is that low there, okay? So that was the low that got run, right? Now what you want to do is you want to just scale down. So it's the same thing you're doing, guys. You're scaling down, right? And you're seeing, okay, where, what low was run and where was the breaker that was used to run that low. So guys, like in this instance, the breaker that was used, you couldn't see on the 4-hour, but you can see it on this time frame, and it was that white candle there, right? It was the last candle that was above this low that pushed price below that low. So that candle is where they sold from, where the market maker sold from, to give you this little small down move. So once you have that marked out, scale down to the 15-minute time frame again, guys. It's really, really this simple, and I want you to kind of like drill this into your head. If it's not simple, then you're doing it wrong. Okay, like you should have steps you can follow, like measurable steps you can follow to get results. Like this isn't any juicy thing, guys. Like it's just understanding what you're looking for and then knowing when to apply it. So same thing here, guys, right? We got our hourly block marked out. Now what we're going to do again, we're going to refine this. So we're going to look for the breaker inside of this area, okay? And the big giveaway is when you see price expand and then it retraces. So here, guys, this would be the breaker that you would have used for this setup right here. It's the last up candle that pushed price to close and break that structure. So in this situation, guys, you want to be getting long once price breaks above the high of this breaker, okay? So, it's the same thing you're really looking for, like, except with the block setup and with the OTE setup, you're looking for an OTE retracement. However, with the reversal, right, the reversal patterns, when highs and lows are being run, when you scale down, you're looking for a breaker setup. And, there it is, guys. Like, look, once price gets above it, you enter from there. And this is why I always say you want to put your stop below, like a couple pips below, because as you can see, you did get some drawdown, right? So if you entered from there, your drawdown for that trade would have been like 5 pips and then an expansion, right? And this is why I say you want to always like put your stop below that structure low. Don't skimp on it. Don't try and put it here, for example, and try and maximize your R, like, because guys, you just get stopped out. Like, there's no point doing that. Just go for targets that you can like consistently get, and that's all that matters, all right? Don't try to be hit like 20, 30, 50 on each trade, because it's not about doing that. Like, you get that once in a while, but you wouldn't just collect your money and leave. Like, don't fuck about with the market. So in this instance, guys, what you got here is that you got price pullback inside of the breaker, right? And then you got expansion up. So let's say you entered, if you were just targeting, and when we talk about retracement sellers, guys, so let's say you were just targeting that block right there, because with all counter trend trade, guys, like when you're trading against a trend, do not target the next structure high, because it's very, very, very likely that price will just that you're just trading a retracement of price. So if you're just trading a retracement, you want to like pull your fib out from the structure high and structure low that you're trading a retracement on, and you want to just target the block inside of the OT area first. Okay, so in this situation, guys, like my first target was in fact this block right here. So it was like a 2-hour trade, but obviously price came up into the sweet spot right there, and it came up for a sell inside this area. So I'm just showing you guys like how you can get your target sorted out. But the main thing we're going over today is just your strategy, guys. Okay, and your strategy stays the same. It's just about scaling it down to a time frame where you can get a tighter entry for more reward. So guys, like if you're targeting that block right here, or let's say you're targeting a tip, that's 4.5 hour just from a counter trend trade. So you could have traded this up, and so let's say you were going to go short on this, right? Let's say you already had that sorted out and you're like, okay, great, like I want to go short here. You could have just made a bit of money while it was going up anyway, and then took the short again. So it's all about understanding what you're looking at and how to make the most of this, guys. All right, and that's it. Like once you've got that, then you're all good. So like guys, like that's really just how to use like the low time frames, the 50 minutes specifically. And you could like, it's the same, like as much as I haven't gone over the 5-minute time frame, guys, it's the same thing for the 5-minute. Like there is no difference at all. Right, there's absolutely no difference. So this is like the best way to use this technique. All right, the absolute best. You can just enter on retracement. So let's say price was already moving. So let's say you missed that opportunity there. Yes, you can get a retracement set up lower down here, right? So you can do that, but it's going to be less. There's going to be more chance that that your trade might get run, or your stops might get run before it continues lower. Like you want to try and enter and use this strategy as close to the block as you can, because that is where you're going to get a cleaner setup, and that's where you're going to get a better risk reward, and your trade's going to be a lot more secure. Like it's a lot more scary taking your trade out there, because price hasn't moved yet, but the confirmation, guys, that price breaks structure the market inside of your resistance or your supply area. So it's really simple, guys. Just understand what you're looking at, then use these techniques to frame your trade, and yeah, you'll be fine. All right, guys, so if you've got any questions about this strategy and like how to scale down, if you want me to go through it with you personally, just get on a session with me and we can go through it. But it's really simple, guys. You want to just keep it simple and you'll be all right. All right, guys, see you in the next one.